guys, welcome to another weekend video. Thank you for joining us, and I'm Kayong here again from Alpha Play. In today's video, we'll talk a little bit more on top of just the usual market outlook. Alright, I'll actually talk a little bit more about risk management and how you can protect your capital. Alright, because if you've been following the market, on Friday last week, we have a crash in the British pound. Alright, so some of our traders actually made huge money out of it, but I'd like to just also point out that such events is usually, those black swan events, you can either make a huge ton of profit out of this, or you can actually, lose a lot of money and potentially have a margin call in your account. Alright, but as a risk manager, as a trader, alright, how do you take care and protect yourself and your money from such event? Alright, so if you're still not aware of it, right, this is actually just to share with you. Right, we have a trade call on selling the pound yen. All right, and you can see once price hit our level and it crashes on Friday. All right, so this is where some of our traders actually made a huge amount of money from it. But of course, if you're in the wrong side of it, which means you bought into pound yen, you would have suffered this huge amount of drop. Alright, and this drop was close to about 800 points or 800 pips in the market itself. Alright, so if you are using a form of leverage, right, what I mean is if you are trading on an account of, let's say, $10,000 and you trade a size of 0.1 lot, right, that's about 10,000 contract. So that gives you about 1:1. So it basically means that you're not on a leverage. But if you decide to trade, on a larger lot size based on the $10,000 account, let's say you go for a standard lot, alright, and that's 100,000 units. That's 10 times your leverage or on your equity. Right? So what will happen is that even if you have to put a stop loss, right, such event when it happens, right, there's some form of liquidity crunch. Basically, you can't even get filled with your stop loss, and that's where a lot of traders actually lose tons of money, even when they have a proper stop loss. It's because they over leverage their position. Alright, so two ways to deal with it is definitely one, not to over leverage, meaning as best is to trade 1:1, meaning if you have a $10,000 account, just trade at max a 0.1 lot, which is a mini contract. Alright, and of course, depending on your capital, your account size, you do trade proportionally as well. Alright, so that's one way to protect yourself. The second way is to, of course, not have any positions held overnight. Simply put, is that when you're trading, alright, and you fix a trading session for yourself. So after that trading session has been concluded, right? For example, if you trade the UK and the US session, so every time before you shut your computer down or you end off your trading day, alright, close all your positions. That means do not have any active or pending orders putting in place with your broker, and with that, whatever things that's going to happen in the market, you're actually well protected because you're not in the market, you're not going in the market, whatever is going to happen, right? So you're actually safe with that, right? So this is basically the two ways in which you can protect yourself from such black swan event. All right. Again, to recap, one is to never leverage, meaning you trade 1:1. For every $10,000 account, you just trade a mini contract, which is 0.1 lot. And of course, the other method is to do intraday form of trading, meaning you close off all your positions by the end of your trading session itself. Right, so this is just a very general and basic introduction of two ways in which you can protect yourself from such event that is going to happen. Right, but I'm not going to go in too in-depth because this is not the intention of this video. Alright, but just because it happens during the session last week, and I thought it would be great to just do a quick sharing about this topic itself. So let's go into the outlook. Alright, and again, our routine is we always summarize what happened last week. In terms of the key events that is important for last week was actually the pound PMIs, right? Manufacturing, construction, and services. And we did see that all three of these UK PMIs came in better than the expected, better than the estimates. But this data didn't save the pound from selling off further. And of course, the next important data or piece of information last week was RBA cash rate, alright, or RBA rate statement. There isn't much changes, alright. So right now, what's moving forward, what's for the Aussie is really mainly on riding on market risk sentiment, alright, whether is it risk on or risk off, that will really determine the flow on Aussie itself. And of course, GDP price index for New Zealand came in negative 0.3, negative 3%, which is much worse off than the previous data, and that's why we did see a sell off in the Kiwi dollar itself. And of course, NFP is one of the key information to look out for, and we did see that average hourly earnings came in as expected, but NFP non-farm payroll came in quite disappointed with unemployment rate increasing by 0.1% as well, right? So this is actually not positive for the dollar, and we did see some profit taking and some sell off in the US dollar itself. So moving forward for next week, what are some of the key events to take note of? Alright, Monday is a US holiday, so it will be pretty quiet in the market. Best is not to trade it, and what we expect is that momentum from last week is highly likely gonna continue going into the earlier segment of next week itself, which is Monday and Tuesday. Alright, so nothing much all the way until Thursday, where we have the FOMC meeting minutes. This will be important because it will determine what is the tone from the Fed moving forward, and this might impact the probability of whether we're gonna see a December rate hike in 2016. And of course, Friday, again on US dollar, we have three pieces of information: the core retail sales, the PPI, as well as the prelim consumer sentiment. This will be important as well, simply because retail sales brings in economic activity and eventually will also lead into inflation. Alright, so of course, and consumer sentiment is also important. Alright, so if you look at this, all these three pieces of data is expected to come in better than the previous. So we do need to see the actual releases being at least meeting the expectation or even better to continue to see dollar being supported. Of course, if this data come in negative or disappointed, meaning lower than the expectation and the estimates, we might see further sell-off in the dollar itself. Alright, so there are a few setups that I'd like to share with you in this video. Basically, for next week itself, we do have some outlook. Alright, so the first one is Aussie dollar. So mainly on H4 time frame, what you are looking out for right now is that what you are looking at is price is currently in a range environment, a huge one. Alright, the top of the range is around 7725, and the bottom of the range is about 7460. Alright, so what's happening is that when market is in the range, we tend to adopt the advanced price action strategy, or other known as harmonic patterns. Alright, so what we did is we usually pull in our Fibonacci to measure a ratio. Alright, and to see if the price movement or the price swings actually respect and meet certain criteria of the ratios itself. Right, so I'm not going to go in depth one by one because we have a video in terms of a webinar and introduction of harmonic patterns. So I won't go in depth as to how these are being identified, but just to share with you, there are potential setups happening in the market itself. Alright, and this one is a potential bet all the way back down at 7475 for a completion. Alright, so what it means is that if price continue further lowering, alright, dropping further lower, we might look for a potential buy setup at this area around the 7475 region. Alright, and of course, what we do is usually we go on a higher time frame, meaning on H1 we actually go one time frame higher on the daily. So I'll just simply quickly check and see if there's any potential support and resistance that confluence with this completion of this pattern, right? And we did clearly see that we have some form of structure over here, structure over here, and structure over here in the past as well. Right, so not too bad in terms of a technical setup for this. Alright, again, you need to take into account if you are more a holistic and comprehensive trader, take into account the fundamental and sentiment of Aussie as well as the US dollar. Alright, but just to simply share with you in terms of a technical perspective, we do have a potential area that we are looking out for in terms of Aussie dollar. Okay, just to share with you another setup that we have, Kiwi dollar. Alright, what you see over here is price has broke the previous structure. You can see previous structure support, tested one time, two time, three time, four time, and then eventually price make a significant break below, and right now is still in the form of retracement. Alright, so what we do is we usually just pull in our Fibonacci and we intend to trade the retracement, right, in the direction of in the direction of the new trend, all right? In the way when price make a new low and a lower high, all right? Basically, it's already in a downtrend. So what we are waiting for is at this area, you can see that we have previous structure, and I drew in my Fibonacci tool as well. We have a 61.8 Fibonacci confluence, all right? So what it means by confluence is that when two things are happening around the same area, higher probability that this trade is going to be a successful one. Alright, so what I'm waiting for is for price to eventually come up higher, alright, retrace higher towards the 7235 area, and I'll look for an opportunity to short the market back down towards its previous low at 7130. Alright, so it's a very simple setup, not something that is very complicated. Basically, price moving lower, we are waiting for a retracement to enter the trade. Alright, so nothing fanciful. But overall, if you follow according to your plan and you manage your risk well, it is a profitable strategy simply because of risk to reward and you have more than 50% hit rate. Alright, another setup that I'd like to share with you for this week is Aussie Franc. This one I'll spend a little bit more time to talk about it because we do have two potential setups coming in. Alright, again, to look at it on the overall picture, right, is in a range environment with the bottom of the range at 7260 and the top of the range around over here. Right, this huge region around 75. So again, price is not moving any specific direction. It's not forming a higher low, higher high, or lower low, lower high. So it's in the range, and again, we adopt the pattern strategy when market is in a range environment. So right over here, all right, we do have a small pattern forming. Right, and this is actually a Gartley pattern. Alright, so let me just put in my Fib to do a quick check on the specific level that I'm looking out for. Alright, the completion of this level would be at around here, alright, 0.7360. Alright, if I drop in the horizontal line, you see that it confluences with the previous structure as well, right? Structure, support, and resistance. So this is a small Gartley, but if those who are sharp, right, we do have another pattern that is a bigger one, completing around this region, and this is actually a sharp pattern, right? Just a disclaimer that different traders trade and engage this pattern slightly differently. All right, so again, I'm not here to just tell you that these are definitely the best way to trade it, but I'm just sharing you in terms of my perspective of how I trade it. So the other pattern that I'm looking out for is way lower, right, at 7275 region. Again, I drop a horizontal line and just quickly go on a higher time frame to check if there's any structural support and resistance. Again, these two lines, one is a smaller pattern, one is a bigger pattern. You can see the bigger pattern, we do have a clearer form of structural resistance and support. Right. So if you ask me, some traders tend to start asking, how do you deal with such situation when you have two key levels to look out for? Which one do I take? Which one do I trade? Again, there's no right answer in trading. It always boils down to your risk profile, right? Matching your personality, your trading style with your trading plan, right? That's why there is no one single plan that's going to fit all traders. It's not a one-size-fits-all thing. So what you need to do is really understand yourself. What are your style? What are your approach? All right. So what I can do is I can just share with you my perspective and how I deal with such situation. All right. To me, risk to reward is definitely more important. Higher confluences like this, right, it's also more important to me. So I don't mind missing some opportunities or missing some trades that eventually turn out profitable. But when I want to enter only trades with higher risk to reward. That means every dollar that I risk, I want to expect a higher form of returns. Right. So to me personally, I would not take the smaller pattern. All right, I will forego this and I only aim for the bigger one. Alright, which is the completion around at 7275. Alright, and again, if I show you in terms of the confluences that you get on this level, 1 time, 2 time, alright, 3 and 4, alright, and of course this one 5th time as well. So we do expect that this level or this area is actually a very strong support area. Right, so if you ask me these two patterns, which one will I take it? I'll definitely take the bigger one. Right, so this is the 3 setups that I would like to share with you on in this week's video itself. Right, again, use these setups as an educational piece. Do not take it as a signal. Do not just plainly trade them blindly, because it doesn't benefit you as a trader. Take it as an educational piece. Walk through it, understand my thought process, why I take these trades. It'll benefit you more in the long run. Right, so to end off this video, I would introduce and gladly invite you to 2 things. All right, the first one is we are running a webinar, and we are opening up it we're running it on a weekly basis on every Monday, all right? But it's really with our group of traders. But this Monday itself is slightly special, because what we are doing is we're going to open it up for the public, meaning all our subscribers, all our followers, and in the communities, all right? What you need to do is go over to our website, /webinar -invite. All right, I'll drop this link in the video below as well. What you need to do is just register, all right? And upon registering, you actually get the link to the trading room, the live room for the webinar itself, and some instructions, some very simple instruction on how to operate it. Alright, so this is one. The second thing is, if you are in Singapore right now, because this is only applicable to people who are based in Singapore, alright, because this is a physical one-to-one meetup. We are having a mini competition, alright, to actually to reach out to more traders and to help them in their trading. Right, so what we organize is a one-to-one Forex coaching session. Either myself or JT will be meeting up with you guys on a one-on-one session, and of course, this is more of a casual meetup, a casual coaching session over coffee. Alright, so you don't have to pay anything. It's a free session, but what you need to do is just simply follow these steps. Alright, register yourself. Alright, and we'll at the end we'll select 30 winners, and we'll notify you accordingly as well. Alright, so again, I'll drop this link in the video below, and of course, lastly is you can actually access these links on our Facebook page as well. So if you haven't liked our Facebook page, do go over to Alpha Play Forex Trading School and like it, and if you can actually get notified whenever I post something. Alright, so we do post certain short videos, notifications on our webpage as well. Alright, so other than that, I'll leave you off in this video as of now, like this. Alright, do like and subscribe to our channel, share this video with your friends and communities of traders, and of course always manage your risk and trade according to your plan. So if you have any other questions that you want to clarify, alright, feel free to always comment below in the video, and I'll talk to you in our next video.